Hey everyone! Bitcoin is making headlines again, and this time it's not because of a certain tweet from Elon Musk. Let's be honest, he probably tweeted about it too. Digital money is on the rise, and everyone's wondering why. Buckle up, because we're diving into the exciting world of Bitcoin and something called the Bank of Japan. Imagine a roller coaster. Now imagine that roller coaster is the price of Bitcoin. Yeah, it's been a wild ride lately. But here's the thing. This latest climb isn't just any ordinary up and down, it's connected to a big decision made by the folks who control Japan's money supply, also known as their central bank, the Bank of Japan. So what did the Bank of Japan do? They decided to shake things up a bit with interest rates, those little percentages that determine how much it costs to borrow money. But hang on, before you get bored, I promise this is where it gets interesting. Now usually when central banks mess with interest rates, it's about as exciting as watching paint dry. But this time, the Bank of Japan threw everyone a curveball. They decided to keep interest rates super low, like lower than a limbo champion after a big meal. Why does this matter? Imagine you're at a party, and someone brings out a giant plate of delicious cookies. Everyone wants a cookie, right? Well, that's kind of what happens when interest rates are low. Borrowing money becomes cheaper, so everyone wants to take out loans, invest, and spend. But here's where things get really interesting for Bitcoin. See, when people have more money to play with, they often look for alternative investments beyond the usual stocks and bonds. And guess what's become a popular alternative? You got it, Bitcoin. So Japan's decision to keep interest rates low created this ripple effect. It's like throwing a pebble into a pond, only the pebble is a giant pile of money, and the pond is the financial world. And as those ripples spread out, they're boosting demand for Bitcoin. Think about it. When more people want to buy cookies, the price of cookies goes up. Same thing's happening with Bitcoin. The more people want to buy it, the higher the price climbs. Now, we're not saying that Japan's interest rate decision is the only reason Bitcoin is going bonkers. There are always lots of factors at play in the crypto market. But it's definitely a major player, and it shows just how connected the global economy really is. Part 4. Picture this. Understanding the money flow. Still with me? Good, because we're about to use our imaginations. Imagine a giant bathtub. This is the global economy. Now picture the Bank of Japan turning on the faucet and pouring in a whole bunch of money. That's what's happening with these low interest rates. Some of that water or money will flow into traditional investments, but some of it will spill over into other areas, like Bitcoin. It's basic economics, folks. Supply and demand. And here's the thing about Bitcoin. There's only a limited amount of it, just like those delicious cookies at the party. So, when demand goes up and supply stays the same, guess what happens? The price shoots up. Part 5. Bitcoin's wild ride, a history of ups and downs. Now, if you've been following Bitcoin for a while, you know this isn't its first rodeo. This digital bucking bronco has been on a tear ever since it burst onto the scene. It's had some major booms and busts, making some people cheer and others pull their hair out. Remember that roller coaster we talked about? Bitcoin's price history is like riding that roller coaster blindfolded, hands in the air with someone shouting random numbers at you. It's thrilling and terrifying and a little bit confusing all at the same time. But here's the thing. Despite its volatility, Bitcoin has always bounced back. It's like that friend who always knows how to make a dramatic entrance, even if they show up late with a lampshade on their head. Now, wouldn't that be something?